Hey everyone, I wish you all a very happy Diwali. This festival of light symbolizes the victory of good over evil. I wish it brings immense prosperity in your lives. Now when it comes to Diwali, my childhood memories are all about new clothes, sweets, crackers, meeting your loved ones, and of course the lights and Diwali Puja. There is always a lot of excitement for this festival. And since Diwali is considered very auspicious, it is also a season of new beginnings. People love to shop new items including electronics, automobile, gold jewelry and also invest their money. Hence, in this Diwali special video, I have identified 10 stocks that will benefit from one of the biggest theme in India we have, which is consumption. And these stocks are not for next Diwali but for next 10 Diwali, as I am a firm believer in power of long-term investing. But before we proceed, I have one humble request. Please do not invest based on tips. Learn about stock investment. There are great books, great YouTube channels and a lot of courses out there. Just ensure that this Diwali you also enlighten your mind with right knowledge about how to pick fundamentally strong companies so that you don't have to depend upon others. By the way, I would like to tell you that my podcast Personal Finance 101 with Sahil Bhadviya is now available only on Spotify. On the podcast, I continue to share my knowledge on personal finance and investment to help you make better financial decisions. So do check out my podcast on Spotify in both video and audio format. I provided the link in the description. Alright, with this, let me share my top 10 Diwali picks. When it comes to Diwali, we Indians love buying gold. So my first Diwali pick is the leader in Indian jewelry segment. It's Titan, the parent company of Tanishq, Zoya, Mia and CaratLane. Interestingly, Titan is also a leading company in various other categories like watches and wearable segment with its Titan brand of analog and digital watches along with other brands like Fast Track, Sonata, Nebula, etc. Company is also expanding into eyewear category with a chain of Titan Eye Plus stores, then fragrance category with brand Skin, then sari category with brand Taneria, which are in a very nascent stages and each category has the potential to grow huge. Recently, Titan has introduced women handbag segment, which is again a very high margin business. Titan enjoys a very strong brand name and with deep presence in the Indian market with nearly 2,300 stores all over the country and planning to add 700 new stores over the next couple of years, including expansion in global markets like Middle East and US. Titan has been a great multi-bagger company in the past and has all the gunpowder to continue being a consistent compounder for the next 20-30 years as the consumption story in India has just begun. In the last 5 years, Titan revenues have grown from 13,261 crore in FY17 to currently at 34,769 crore at a CAGR rate of 19%. And profits have grown from 697 crore to 2,970 crore at 30% CAGR. Company is highly profitable with both ROE and ROC about 20%. Currently, Titan commands a market cap of around 2.3 lakh crore rupees and from valuation perspective, Titan commands a premium with a P ratio of 79. But this is one company that can be considered for investment in the form of SIP. Diwali is the festival of lights and hence my next Diwali pick is also on the same line. It's Polycab, a leader in Indian cables and wire segment and a leading fast-moving electrical goods company with products like fans, lights, switches, switch gears, etc. Polycab has also launched a series of smart IoT-enabled devices including smart fans, smart lights, smart water heater, etc. Company also has strong presence in solar segment with solar inverters, solar DC wires, solar panels, etc. Considering the growth in infrastructure, wires and cables are required in every industry and the rising demand for housing due to urbanization and nuclearization would continue to drive demand for fast-moving electrical goods. Hence, Polycab is one company that would continue to grow consistently for the next 20-30 years. In last 5 years, Polycab revenues have grown from 5,500 crore in FY17 to currently at 13,411 crore at a CAGR of 17.6%. And profits have grown from 233 crore to 1134 crore at 33% CAGR. Company is highly profitable with ROC consistently about 20%. Currently, Polycab market cap is around 40,000 crore, so it is a mid-cap company. And from valuation perspective, Polycab is trading at a P ratio of 36, which is looking reasonable. Again, this is one stock that is worth adding in SIP mode. Diwali is an occasion where we buy new products like TV, smartphones, lights, washing machine, etc. A, because it is auspicious to buy new things on Diwali, and B, because there are great discounts during Diwali season. Hence, my next pick is the leading manufacturer of smartphones, TVs, LED lights, washing machine, etc. It's Dixon Technology. Established in 1993, Dixon Technology is basically a brand behind the brands. It means it manufactures electronics products for various brands including Samsung, Xiaomi, OnePlus, Philips, Havells, Syska, Bajaj, etc. If you look at the future growth, people would continue to buy consumer durables due to rising per capita income, higher disposable income. Then smartphones are one of the hot selling product category and would continue to be in the future. Moreover, Chinese disruption and government initiative like Make in India, Atmanirbhar Bharat, PLI scheme has created great opportunities for Dixon Technology. In the last 5 years, Dixon Technology revenues have jumped exponentially from 2,457 crore in FY17 to 12,748 crore at a CAGR of 34.9%. Its profits have increased from 48 crore to 218 crore at a CAGR of 31.7%. Again, company is highly profitable with both ROE and ROCE about 20%. Currently, Dixon commands a market cap of 26,000 crore, so it is a mid-cap company. But due to its leadership in electronics and consumer durable space, which is looking very promising, company commands a high valuation with a PE ratio of 112, but worth investing systematically for long-term wealth creation. Now, when it comes to Diwali, who can forget food? So my next pick is from QSR segment. It's Jubilant Foodwork, the parent company of Dominos Pizza India. Basically, Dominos Pizza is a US-based company and Jubilant Foodwork holds an exclusive master franchisee of Domino's Pizza in India. Well, personally, I'm a huge fan of Domino's Cheese Burst Pizza. Let me know in the comments if you're also a Domino's Cheese Burst fan. So, Jubilant Foodworks started Domino's chain in India in 1996 and today, company has more than 1,300 Domino's branches all over the country. It also operates Domino's chain in Sri Lanka and Bangladesh. In addition to Domino's, Jubilant Foodwork also has exclusive rights of Dunkin' Donut. Then it has also started a Chinese restaurant chain with the name Hong's Kitchen that specializes in Chinese food. Moreover, company has also forayed into FMCG segment with a range of ready-made sauces, pastas and gravies under the name Chef Boss. Company is also targeting the biryani lovers with its new chain under the name Ekdum. And to cater to chicken lovers, company has got an exclusive right of Popeye's restaurant. So overall, company is catering to various taste buds right from pizza to donuts to Chinese food to ready-made gravies to biryani and chicken. Although Domino's is still the largest contributor in company's profitability and Jubilant Foodwork has a long way to prove its mettle in other segments. However, considering the big trend of people going out for lunch and dinner, Jubilant Foodwork certainly has a bright future. Especially the young generation like branded chain of QSR restaurants. And India is a huge market for growth. In last 5 years, Jubilant Foodwork revenues have jumped from 2,583 crore in FY17 to 4,758 crore at a CAGR of 11.7%. Its profits have increased from 58 crore to 462 crore at CAGR of 45.8%. Again, company is highly profitable with both ROE and ROC about 20%. Currently, Jubilant Foodwork commands a market cap of 40,000 crore. So it is a mid-cap company and trading at a P ratio of 86. Company share price became very expensive last year during the bull run, but it has seen a good correction in last 1 year and now looking attractive for long-term investment goal. When we are talking about Diwali, we all want eco-friendly Diwali, isn't it? Hence, the next talk is based on the theme which is Go Green. It's Tata Power. Established in 1911, Tata Power is one of India's largest integrated power companies present across the entire power value chain of conventional and renewable energy, power services and next generation customer solution including solar rooftop, EV charging station and home automation. In the future, sustainability would be a key factor and Tata Power leads the industry in clean and sustainable solutions. Tata Power established Mumbai's first set of electric vehicle charging station and is now present in other cities including Delhi and Hyderabad. Recently, Tata Power has signed an agreement with HPCL to provide end-to-end EV charging station at HPCL's petrol pump in multiple cities and major highways across the country. Then Tata Power is present across the renewable value chain from solar manufacturing to customer rooftop solution. So clearly Tata Power is among the leaders in EV charging infrastructure in the country as well as working on clean energy business. Both EV charging and clean energy business are the future with immense growth potential. In the last 5 years, Tata Power revenues have jumped from 27,588 crore in FY17 to 47,179 crore at a CAGR of 10.2%. Its profits have increased from 1100 crore to 2573 crore at a CAGR of 16.7%. Although the company's profitability is on the lower side. Currently, Tata Power commands a market cap of 70,000 crore and trading at a P ratio of 32, which is looking reasonable. Again, this is a SIP grade stock for long term. When we are talking about Diwali, we can't ignore the banks. Because be it buying a new house or a car or buying consumer durable, people take loan or buy things on EMI. And this directly benefits the bank. Hence, I have two picks from banking sector. One is from large cap sector and another is from mid cap. In large cap, my preferred pick is ICICI Bank. Established in 1994, ICICI Bank has been one of the initial few private banks in India. And what a journey it has been for the bank. It has been full of ups and downs. I remember during 2008 global financial crisis, ICICI Bank was on the verge of bankruptcy and its share price tanked more than 80%. Then again, we saw issues with Chanda Kochar, the ex-MD of ICICI Bank, allegedly involved in money laundering. But since Mr. Sandeep Bakshi has taken over the bank as new MD in 2018, ICICI Bank has again emerged as a leader in Indian private banking sector, beating HDFC Bank on a consistent basis on key parameters in the last few quarters. As a result, this bank has now become the hot favorite of all top mutual fund houses in India. In last 5 years, company's loan book has grown from 5.6 lakh crore in FY18 to 9.2 lakh crore by FY22. Its net profits have jumped from 9,100 crore in FY18 to currently at 29,318 crore, and asset quality has improved by NPAs falling from 5.4% in FY18 to 0.8% in FY22. Currently, ICICI Bank commands a market cap of 6.2 lakh crore and trading at a P ratio of 22, which is still looking reasonable in spite of a good growth in company's share price in the last few months. And now my preferred pick from mid-cap banking include IDFC First Bank. IDFC First is the latest private sector bank that received the private banking license in 2015. Later in 2018, IDFC Bank was merged with Capital First to form IDFC First Bank. Although after the merger, the next 3 years were very challenging for the bank due to bad loans from corporate sector that bank inherited from its parent IDFC. However, under the leadership of Mr. Vaidyanathan, IDFC First is completely focusing on retail banking and reducing its exposure from corporate loans. And finally, now the results are showing up where the bank has shown exceptional performance in the last few quarters. By the way, Mr. Vaidyanathan is also the key person behind setting up the retail business for ICICI Bank in early 2000. He is very confident on IDFC First growth journey and expect the bank's advances to grow at 25% CAGR basis for the years to come. In the last 5 years, company's retail loan book has grown from 35,800 crore in FY19 to currently at 90,630 crore. And after huge losses in the past, bank's profits for trailing 12 months stood at 1,238 crore and bank's NPA has fallen consistently and asset quality has improved significantly. Currently, IDFC First Bank commands a market cap of 35,000 crore and trading at a P ratio of 28, which is still looking very reasonable in spite of a good growth in company's share price in the last few months. Now, Diwali is a great occasion to invest money for prosperity. And when it comes to investment, more and more people are investing in stocks and mutual funds. Hence, my next two picks are from financial sector. First is CAMS. CAMS is a leader in Indian RTA segment with nearly 67% market share. In simple words, CAMS is a financial infrastructure and service provider to mutual fund houses in India. Now, historically, Indians have invested in real estate, FD, insurance and gold. But there is a growing awareness about investment in Indian economy and new age fintech companies have made investment in mutual funds very convenient. By the way, mutual fund industry in India is still in a nascent stage. Just to give you a comparative idea, Indian mutual fund industry is just $0.5 trillion, whereas US mutual fund industry is $25 trillion. That's 50 times bigger than India. Imagine the growth potential. CAMS would certainly benefit from this growth. In the last 5 years, CAMS revenue have jumped from 464 crore in FY17 to 899 crore at CAGR of 12.8%. Its profits have increased from 108 crore to 268 crore at CAGR of 18%. Again, a highly profitable company with both ROE and ROCE above 50%. Very few companies have that kind of high profitability. Currently, CAMS command a market cap of 13,000 crore and trading at P ratio of 48. My next stock would benefit from direct stock investment. It's CDSL. There are only two depositories to open Demat account in India. It's CDSL and NSDL. And CDSL has more than 50% market share in Indian Demat sector. We have already seen an explosive growth in Demat accounts last year. And considering the potential in Indian economy, millions of people would open Demat account in the next 10-20 years. This would directly benefit CDSL. In last 5 years, CDSL revenues have jumped from 146 crore in FY17 to currently at 574 crore at CAGR of 28%. And its profits have increased from 87 crore to 305 crore at CAGR of 25.6%. Again, a highly profitable company with both ROE and ROC above 30%. Currently, CDSL commands a market cap of around 13,000 crore and trading at a P ratio of 41. Both are SIP grade stock for more prosperous Diwali. During Diwali, we order a lot of stuff online, and for that product to reach from warehouse far away from your home to your doorstep, every logistic and transport partner needs GPS navigation, isn't it? Even the food that we order online reaches our doorstep using a GPS navigation system. In fact, when you buy a car during Diwali, it has an inbuilt navigation system. And today, GPS is a very integral part of our life. Hence, my final stock pick for Diwali is a new age digital map service provider, CE Infosystem, also known as MapMyIndia. Established in 1995, MapMyIndia is India's leading provider of advanced digital maps, geospatial software, and location-based IoT technologies. There are already many use cases of digital maps in new age internet technology companies like e-commerce companies, fintech companies, ride-sharing companies, food delivery companies, logistic companies, IoT manufacturer, etc. Some of its clients include Maruti, Hyundai, Mahindra, Uber, Facebook, Airtel, PhonePe, HDFC Bank, Amazon, Apple, and the list goes on. MapMyIndia has recently entered into various MOUs with government organizations such as ISRO, Niti Aayog to provide Atmanirbhar or indigenous geospatial solution and capabilities to Indian user. MapMyIndia has also forayed into 3D metaverse map that could also be a good source of revenue in the future. Its revenues have jumped from 135 crore in FY19 to 222 crore at CAGR of 16.5%. And its profits have increased from 34 crore to 91 crore at CAGR of 35%. MapMyIndia recently had its IPO and commands a market cap of 7,200 crore and trading at a P ratio of 80. So in this video, we discussed 10 stocks that you can consider investing this Diwali for more prosperity in the future. This stock include Titan, Polycab, Dixon Technologies, Jubilant Foodwork, Tata Power, ICICI Bank, IDFC First Bank, CDSL, CAMS, and MapMyIndia. What do you think about this list? Let me know in the comments. My only request is make sure that you also do your own research before investing your money. And I know that there's a lot of uncertainty in the global market and many stocks are still down from the peak during last year's bull run. But if you are a long-term investor and have patience to stay invested during this difficult time, and in fact, utilize this opportunity to accumulate quality stocks, then you will surely create wealth in the long term. I wish you all again a very happy and prosperous Diwali. And if you find this video useful, then do subscribe to this channel. I'll see you next video. Till then, take care.